this video, we will take a look at the number one tip that I use when trading gold, what events move gold, and finally, how you can start using it inside of your own trading. If you are struggling to trade gold, you have to take a look at time-based liquidity and fundamental. Now, why are these two things important when trading gold specifically? On the higher time frames, gold is moved by macroeconomic events. This can be inflation news such as a CPI, PPI, or PCE. When this news comes out, you're gonna see a huge spike in gold. This can also be geopolitical tensions such as wars happening in the Middle East, wars happening inside of different countries. This moves the price of gold. This can be unemployment as well, especially when we're talking about US numbers, because US is one of the leading economies side of the world. Gold is mostly moved by what we like to call fear. Fear is very important when we're trading gold, because as people get more fearful inside of the world, they want to invest in something that is safe, such as gold or the US dollar. When there's uncertainty, people tend to buy gold. Now, on the higher time frames, we can see that gold is moved by these fundamental themes happening inside of the economy. Right now, the price of gold is moving lower due to there being a little bit less uncertainty, just for now. But for the whole majority of this year, gold has been pushing higher. We've been having war tensions, we had elections, we've been having inflation data, we've been having all these things that have been pushing the price of gold higher. On the lower time frames though, gold loves time-based liquidity. Gold loves to move based off of liquidity on the lower time frames. So what do I mean by this? Gold likes to take out the session highs and also lows. Gold loves to take out previous daily highs or also previous daily lows as well. You will see that in other assets. Other assets love to take out liquidity, but gold especially has a bigger range of movement than most assets, and it loves to tap into these areas before making the actual move. The only tricky part about trading gold is knowing which draw on liquidity that is going to take out for the entire day. But most of the time, gold likes to touch to these levels before moving in the actual direction. Now we're going to go through a couple of examples of this on the charts so that you guys can see it. Here is the first example that I have for you guys. So right here in this area, we have Asia high. Now during New York, once New York opens, we see what? We see news come out during New York. So this was on Friday. We had poor retail sales come out on this day. As soon as news comes out, we already swept Asia before the news dropped. But once the news dropped, we sweep above London, which would have been right here. This would have been London high. Asia high is over here already, and then London high is right here. So news drops, we sweep above all of this, we tap in here, and then we reject, and then we go lower. A lot of times when I used to trade gold, news would drop, but I'd see that gold doesn't immediately have a reaction. It goes to one of these levels, takes out a liquidity, and then moves in the opposite direction that it wanted to go in the first place. Here is another example that I have for you guys. So right here, Asia high is up here on this level, but we're not going to focus on Asia high because we didn't take out Asia high this day. London high was right here. This was the London session high before New York opened up at 7. We can see that during New York session, we sweep above London high, and then we tap into and fill this zone, and then we start rejecting the other way. We don't reach all the way for Asia, but we do sweep London, and then we reject and go the other way. So like I said, when I'm trading gold, I like to see a full sweep of one of these levels, whether it be London high or Asia high, before I'm looking to trade and get back into gold. Before we get back into the video, I just want to tell you guys I'm doing a free giveaway inside of my free Discord group, where once we hit 1,000 members, I'll be giving away a prize worth $500. Also in my free Discord, I do give away free signals. Now my signals for November have not been the best. I will be honest with you guys, I've been going through a losing streak until yesterday's signal, but we did get out of here at break even, but the trade ended up going for 4R. If you would have held, and yeah, I show all my trades. This is basically my track record. Anybody in the group can say I'm live and sending them out before the trade happens. continue to do this forever. They're always going to be free. Now here is another trade example. This was CPI, and like I said, I like to wait for news to happen before getting inside of a trade on gold, just because I know news likes to manipulate. So coming into it, we could see that we had Asia high over here, and we also had London high. CPI drops exactly at 7:30. What do we see? Manipulation of both Asia and London at the same time. And then what does gold do? We start going up, moving up, faking people out, and then we literally tank and we go in the direction we wanted to go in. Now I almost got into this move, but I thought we were gonna retrace a little bit higher before rejecting lower, so I did not get into this move. But this move was very, very, very nice. From the macro perspective, right now gold is moving lower. We have easing tensions, we have less uncertainty, or we had less uncertainty happening, so we see gold selling off. And then on the lower time frames, we know that on the higher time frames we're moving lower, but we just need an area of liquidity to take out so that we can get inside the markets. So then we wait for our time-based liquidity to be swept, Asia or London, or both. If it's both at the same time, even better. We have both taken out, we wait for the sweep. Next we have change in character, get inside of the trade, and we aim lower. That's literally it. It's as simple as that. Waiting for sweeps to happen, and then waiting for the market to tell us when to get in, and then aiming for a high risk to reward. Now there is a couple more of confluences that I use before I get inside of any trade, when we're talking about gold especially, but that would take a whole entire video on its own to explain my full system. This is just mainly a pro tip that you can use when trading gold. So I hope you guys enjoyed this video. I hope you guys can use this inside of your own trading, especially when trading gold. Always remember to look first at the higher time frame, look at what the fundamentals are saying, look at the news and where price is moving, then go on your lower time frames, look for time-based liquidity sweeps. Mainly I look at the session highs or lows to be taken out before getting inside of the trade and targeting the next area.